Silver at $14.65. Commodities, everything's down. Commodities, stocks, you name it. Frozen, colorful beads of ice cream with flavors like Moose Tracks and Cuttlebug. Dippin Dots can be found in malls and grocery stores, gas stations, and entertainment venues across the United States. After a 3-year process, the American ice cream chain literally just launched in China last month, with a plan for 11 outlets in Shanghai to open by the end of the month. Before the trade war, Dippin Dots models showed that their China revenues will eventually surpass their U.S. sales. But has that all changed now due to the U.S.-China tariff war? Dippin Dots CEO Scott Fischer joins us now in a Fox Business exclusive. Scott, so glad you're here. You know, you manufacture in Paducah, Kentucky, and then export that to China to stock your new stores there. What is the current tariff hit that you're taking right now?
Our tariffs can go up to 44% from 19%. That's a 25% increase, which is very, very hefty. That's like me going to a steak restaurant being forced to pay a 44% tax. I'd probably end up going to Taco Bell. But in this situation, we like the market in China. We are optimistic about it, so we're going to try to stick with it.
Well, that's a horrible tariff hit, but we got a sign of sort of a crack in the clouds today where China said, you know what, we are going to cut 25% on those 25% tariffs on certain autos and auto parts and another 5% on some different auto parts and auto pieces there. None of that really helps you, does it?
It doesn't. We're dairy, so we fall under the agriculture, which still has that 25% increase. So it's still going to be a heavy hit.
Have you considered manufacturing in China? You know, you've got Tesla starting up manufacturing,
right,
or at least building a plant on the ground in China in order to bypass the tariffs. Again, by the time they open, the tariff war could be over and the truce could have worked. What's your sort of vision of this? If you modeled that your revenues were going to be amazing from China, now what are you modeling for? Yeah,
I mean, our annual gross retail sales here domestically around $300 million, and we're projected to surpass that potentially in the market of China if things continue optimistically. We have alternative solutions. Unfortunately, producing in China is not an option because they don't have any U.S. Dairy producers, so we'd be forced to use powdered milk, so it wouldn't be the quality that we're used to. But we do have other alternative solutions of other geographic areas and countries that do not have tariffs in China, so we could potentially produce and open up manufacturing there, and then once the trade wars do conclude, move our production back to the U.S.
I see. Okay, so you're already looking at that. I mean, you're obviously smart to be nimble on this issue, but I'm interested to know, this was a 3-year effort to get up and running in China. Did you have to have a joint venture? Did you have to have a partner? You guys have patents for Dippin Dots. Did you have to give your patent over to anybody?
We didn't. We didn't have to have any partners. We went through a three-year process to just properly do everything to open up corporate operations in China. Intellectual property was a big piece of that, and that was a big piece that we went through to properly register all of our intellectual property. But I think IP piracy is just a risk of international business. But I feel pretty safe. I mean, China is very sophisticated when it comes to cyber science and technological advancement, but to cryogenically freeze a frozen ball of ice cream is some pretty sophisticated stuff.
Well, yeah, and you know what? Your founder of Dippin Dots did it in a garage, a couple of decades ago, and it's an all-American brand, and it's something definitely to be protected because they've been known to steal things, and it's pretty unbelievable how they do it. If you could have a face-to-face, Scott, right now with President Trump, and explain to him your experience and how tariffs are affecting you. Pretend he's watching right now. He may very well be. What would you say to him?
Oh, no, I fully support our president 110%. And this is, I think we need to do what's right for America. But the 44% is very expensive. It does hurt business and forces us to look at other alternatives. International business is a big piece of our business. We have increased our employment for production by 31% and our product volume output by 41%, largely due to international business. So it is a big piece of our business model.
Well, good luck. And I think that at some point something's got to give. That's what I'm hearing you say, that you support President Trump, but at some point it's going to really hurt your business. Yes, ma'am. Business is business. I get it. I get it. Well, I love me some Cuttlebug, the pie. I love that flavor. Thank you.
Oh, thank you. Thank you. I'm a huge fan.
Good luck
Thanks,
to you
Liz.
guys.
Bye.
So glad you're watching. Dippin' Dots.
Thanks.
Yeah, buy it. Help them out. Scott Fischer is the CEO.